Hello and welcome. I think we're starting now. Anyone else coming in, please go ahead and take a seat. If anyone wants to move up a bit, that's great too. So we're here with a panel discussion focused on innovation in banking. And I'm going to start with an introduction of the speakers here, and then with a quick overview, and then we'll dig right in. So who we have here on the stage with us? I think NK is in the middle of tweeting in the middle of that. That's great. So NK is the founder and CEO of SunTec Business Solutions, and has been an industry leader in thinking about how to build a relationship-based environment for both the telecommunications industry and then also in banking for the last 15 years. And so we're very pleased to have NK with us to share his ideas and particularly from an innovation perspective, some of the things that he's been seeing across the world as well. We're also extremely fortunate to have with us Brett King. For those of you who are not familiar with him, I would say you should be. Brett, in fact, the first time I read one of Brett's books, I had a bit of an identity crisis because so much of what he's saying are things that we had tried to implement at Schwab when I was there, and to read it in such a comprehensive way as a proposal for the banking industry to look at. It's just been fantastic to be working with Brett over the years, and we're very glad to have him here. His latest book is Augmented. And there's some flyers about that as well. And he'll definitely be talking about what it means to be banking in the digital world, in the digital age, when everything is actually shifting away from all those structures that we are so familiar with. Next, we have Reinhard Meyer, and with Reinhard, we're very pleased to have Reinhard here because he comes from Commerzbank, where he's actually implemented an innovation platform in the last year, working with us and with other partners throughout the bank. But what Reinhard is here to really talk about is, from a practitioner perspective, what are some of the approaches that they took at Commerzbank, and what kind of returns do they get, and how did they actually move this into a situation where they can actually drive faster and faster innovation given the changes in the market. Finally, very, very fortunate also to have Neil Cross. So Neil Cross is the Chief Innovation Officer with DBS Bank here in Singapore. And DBS has been a client of ours now for how many years?
I've only been there 18 months. So.
About 4 years, yeah. 4 years, so it's a bit more than 4 years. And I was just talking with Neil before the panel started about, I had a particular news feed where his name had come up very recently, running a hackathon, but for business people. Bankers, to actually have the bankers, the top performers within DBS, to actually design the future solutions for banking. And so we were very, very lucky to have Neil with us also talking about this topic. Last, I'll just introduce myself briefly. I'm with SunTec. I'm the global head of the financial services industry practice for SunTec. I came to SunTec over 3 years ago, but I'd worked with SunTec for several years prior to that as a practitioner myself. I was a managing director at Charles Schwab, where I actually was given the responsibility of overseeing the systematic transformation to omni-channel customer-centric orchestration. And this was starting back, I think, before anyone was using the word omni-channel. Started that about 10 years ago. So I've been involved in this type of innovation platform, and for those of you that are familiar with Schwab, it's now a Harvard Business case study in terms of how they've done their transformation to customer centricity. So I'll add some perspective from that, and also NK and I both will be talking about other banks around the world as we go through. So we all talk about the changing needs of the customers. It's so obvious. Each of us individually, we experience our own changes in how we're interacting in different arenas. From a banking perspective, in terms of what you see, Reinhard, what changes from a customer need perspective do you think have affected you the most?
I would definitely say that looking at the environment I'm in, I'm coming from correspondent banking. Regulation and everything about it is one of the major changes in how we deal with it. Secondly, naturally, is trying to find ways of serving the customer's needs and finding out the needs that he has, not the needs we develop and push onto him. Mm-hmm. And thirdly, I think in our case, we're a bank full of legacy systems, trying to get the pricing and the pricing structure out of the legacy system into one platform, so we can react much more flexibly to market changes.
Got it. And I think the point that you made there about the environment is really a crucial one, and this is what we see across banking. And there are many people who want to listen to the needs of the customers, but when they come back to their architecture, what they find is that so many things have been built, all these rules distributed across all their systems, it's actually very difficult to create changes there.
That's true.
And so sometimes the voice of the customer is lost simply because when you turn back to your systems, it's difficult to actually figure out how to get it done.
It is. The way systems were designed in the past, at least that's what I found, is that each system was standing, well, each product was standing by itself. And it was very difficult to get this information together, to pull it together, to develop a new pricing model for that, because that was one thing. The other thing is that with the many products and the many systems, you tend to forget the older ones and only find out when crisis hits.
Right.
And then I think it's tough to get things going. Thirdly, being in the legacy environment, it takes much more time to make changes, to make much more time to get information out of the system, and therefore I think trying to get the data into a platform where I can really play with it is extremely helpful, and helps me to focus more on the customer and react quicker to his needs.
Perfect. So Neil, what in your experience, looking at it from DVS and more broadly, what changes do you see from a customer need perspective are pushing for innovation?
Where do I start with that one? Good God. Okay, right. I suppose we'll start in the beginning. Customers never really used to push banks around experience because I felt that they didn't have a comparator point. People didn't go in branches and go, hey, your branch isn't as nice as a retail mall. But when the internet come along and they can have two different tabs in their browser, one's internet banking, one's Amazon, then they started making that comparison. And so the biggest change we're seeing is other industries and other experiences are educating customers on what could be better. And we now call that digital. And so the demands that they're making on financial services around things like straight-through processing, reuse of data assets, contextual offers, relationship-based pricing isn't something they get from banks, they got from other industries and experiences. Then they demand that banks deliver that experience. And so for us, certainly to your point around the data and information, it is absolutely critical. I feel that a lot of banks aren't taking this seriously. Right. On one hand, they talk about having a great digital strategy, which basically means you don't talk or meet a customer in many cases. On the other hand, they don't care about data. Well, the only way you understand a customer if you don't talk or meet them is around data and information. That's the only way you can build a relationship. So for us, it's actually that the core of this thing is the fact that the behavior and expectation of the customer is changing massively. And to counteract that, we're spending a lot of time around data science, data analytics, and really trying to understand the job our customers trying to do. Because they're not there going, hey, I need a mortgage. They're there going, I need to move house. I need to extend my family. I, need to get married. And so a lot of our focus is is to say their needs are changing. We look at data to try and analyze what they're doing, and then we go in person and spend time with customers to see if that in-person interaction matches what we're seeing in the data.
Got it. And Brett, I know years ago you were already talking about the importance of understanding the goals of the customer and even designing into your account structure and the offer structure sort of interactions that match into the specific goals of the individual customers. Where have you seen that type of match between meeting the customer's needs directly actually being delivered?
Well, the fastest growing financial institutions in the world today are not banks. It's Apple Pay, Android Pay, Alipay, M-Pesa, well, Mshwari is a bank. Mshwari is a great example. They brought on 12 million customers and 2.2 billion in deposits in 3 years in Kenya based on M-Pesa. The onboarding of the customer takes 10 seconds. And now, as a result of that shift, they are the largest bank, even though they're a product within a bank, they're the largest bank by deposits and customer numbers in Kenya. Right? And that's happened in 3 years. Alipay, Weibo, the mobile money market fund, they raised $90 billion in deposits in 8 months. If you take the top 20 banks in the world with all of their branch networks, the top retail banks, and you take the branch networks of those top 20 banks, they've never done that. They've never raised $8 billion in deposits, 90 billion in deposits in eight months. So what that proves is that if you look at the changing needs of the customer and the involvement of mobile, that's actually a much more efficient way to engage customers because you're matching their behavior and you're solving a need as it presents itself in a frictionless manner. Any bank in 5 years' time that still requires a signature on a piece of paper to onboard a customer for a product or service will be in a declining business. Right. That's the changing needs of the customer.
Got it. And Kay, I know we've talked about this quite a bit, the shift from trying to rearrange the products and optimize the product use as opposed to coming from, as Brett was just saying, thinking about the customer experience design. What are some examples that you've seen in some of the banks that?
Before going into the example itself, I just wanted to reflect on what is really happening in this world. I mean, from that context and why this behavior. If you really look at, we have got at least 3 generation of customers in this world, who are just the current. Let me go back current to the back. The people who are 100% believe in what is known as the virtual world, because they can relate to avatars, they can relate to digital world. I mean, they're born and lived only that life. They only seen from that day. And then maybe the next previous generation, you've seen both. They're in a confused state of mind, whether I'm a physical entity or a virtual entity, and somebody completely on the previous avatar is completely physical. So just take this, and going back to the experience, when let's say I'm going and buying something online, I can do that in no time. I'm Amazon with that with the Touch ID, and just I do buy most of the stuff on my phone. It just happens. So once you start experiencing that, and then because I come from telecom, do you consider telephone call as an experience requirement? Because it's just omnipresent, right? I just take the call and make the phone. It's just a utility. So if you really go back and compare, the financial product itself is basically virtual content. So this would have been the most ideal candidate to become into the virtual world and utilize all this opportunity. Now, let me come back to the conflict of the experience for the customer which is facing. Something which could have been fantastic, because which is very necessary on a day-to-day, every walk of your life, which is a financial transactions. And that requires a lot of friction. That is what is causing all this change. So if you can consider the product, services, and the context of where this is happening, or the channel, and if you can orchestrate this, and that is what the kind of changes we see in small pieces in different, that's the expectation customer is coming up with, and if you can meet to that demand, and that is the whole thing is about customer experience, and you talk about various dimensions about it. If you can really concentrate on that one thing, any of these changes are very, very logical. And that is what we should be focusing on. Like, that's the change. I mean, I'm just put not only the changes which you're saying, the contextualize that from a thought process and why we should be doing what we are talking about today.
And one of the interesting things in line with this that I've been seeing across the world, some of the most innovative banks in the world have actually been purchasing customer experience design studios. Yep. So these were, they were coming in, supporting them for doing their, thinking from a customer experience design perspective. And you've got BBVA just picked up Spring Studio. Prior to that, Capital One picked up Adaptive Path, which was the grandfather firm that thought of the concept of customer journey and a lot of the aspects of agile development. And every time I turn around, there's another one that's getting picked up as well. and so there's this interesting idea that
you've been funded today.
The significant shift from a customer experience design perspective is actually starting to happen. And so, of course, to design for customer experience, you have to start from the customer needs. My question here, given the audience here, is focused on the corporate banking side. Oftentimes people hear all these phrases, customer centricity and offer management, and they think, oh, this is all retail focused. Brent, how does this apply on the corporate banking side?
Well, you said friction, right? And anywhere there's friction, there is a fintech right out there right now trying to undermine your business. The documentary requirements we put on customers and the workload we give them from a KYC perspective is not attractive. No customer likes jumping through hoops. So if there is another way to collect that information that doesn't require the customer doing the work, then they're going to prefer that. So wherever you've got friction in your business, there's a fintech right now attacking it.
Yeah, absolutely. What we have here, we have an unusual situation where we have a couple of bankers that have actually just recently launched some innovation offers or about ready to the extent that you can talk about those. So it'd be very interesting to hear what kind of offers have you actually been bringing to the market that enable innovation? Or is it just the fact that you're able to get speed to market that gives you the ability to adjust and change? Reinhard?
I would say it's for us it's more speed to the market.
Yeah.
And coming from the FI side and the corporate banking side, we are trying right now to emulate what we're offering in the retail space into the corporate space. So we're working right now on an account opening scheme within 1 day. Here we run into the KYC problems, but I think this we have to really tackle. And
you know what KYC stands for, right?
Yeah. Well,
kill your customers with paperwork.
So you know, yeah.
Kill your customer.
But I think this is basically the way we're going forward, really trying to digitalize some of the offers we have to corporates and offer them a different channel on that.
Mm. And Neil, with your experience?
I think the important thing is just not to annoy customers with blunt offers, yeah? I mean, historically, this is the dumbest thing, yeah, great. I got an offer for leg waxing. Is that a statement?
You need it then, yeah.
It didn't even know I was a man or a woman. Well, I hope it didn't know I was a man or a woman. Or the next level above that is, oh, you bought this on your credit card, so you want an offer on it. How does that help the merchant? I'm already a customer of the merchant, and so giving people offers on stuff they already do, again, it may be not the smartest move. So we're looking at really predicting a few things with the customer, forward predicting which restaurant they'd eat at. We're getting actually fairly accurate at that, which restaurant you eat at in a month. And then building profiles. So if you eat these kind of restaurants and then you buy these kind of things, then actually we can match you up with all these other people are on that trajectory, which means then we can understand that the kind of sport you would do would be kind of this. And I think that's really, really interesting. But then actually we're moving to a point now where we have to experiment with customers to make sure we don't scare them. And so, for example, we do a lot of work on location, as I walk into, say, Starbucks, getting an offer on Starbucks, may scare customers. Like, whoa, that's a little bit freaky. It doesn't help Starbucks either. We just, just took some revenue off them with that. So we're doing a lot of experimentation actually, is when do they want the offer and how accurate do we want it to be?
Yep.
Do we give them the offers for the week on Monday? So we predict you're going to go to Starbucks, you're going to go, Pizza Express, this, that, and the other. And kind of that's the thing, because it's about behavior change. Offers have been so blunt before, so how can we help our merchants drive better revenue outcomes, and then how can we, I suppose, build a profile about our customers where we don't just fire random blunt stuff at them. We try and have a bit of science, but then also we think about trying not to scare them and getting too intrusive with these mobile devices. And a bit about Brett's book, a little augmented, and all these sensors and the data we can collect now, you can get very accurate on predicting where our customers are and what they'll be doing.
So what are some benefits from offers that you've actually put in place already? Given that you've moved to this type of next best provisioning and next best offer provisioning and using the behavior patterns of what customers are doing, what kind of benefits do you see from that type of adoption?
I think for us really it's the relationship building with the customer. And we've actually measured that if we're more accurate with our offering, that we do see more spend on that card, for example. I think that's where a lot of offerings happening. And we do map that. So how accurate are we? Did it? And we try to measure that as well. So if we're quite experimental, so we go, right, these customers will do this kind of offer, this kind of accuracy, and then we'll see how their spend changes. These customers will do something different. And from that, we may do that in 10 different ways and then work out, okay, actually this was the best way to address that customer need. Then let's scale that up, try it again. Did that still work? Yeah, okay, then roll that thing out and just put a bit of science in it. That's the great thing about, the data platforms we have today and the products from SunTec. You can do that.
Yeah.
You can kind of live experiment and tune it to get the best customer outcome. Because at the end of the day, you're trying to help the merchant, you're trying to help the customer, and you want some kind of increase rather than just doing offers for offers' sake.
Got it. And Brett, what would you say are the typical success metrics for organizations that shift into this sort of a customer-centric and a design approach, an innovation approach?
A good question. If I asked a bank 10 years ago what they wanted to be to their customer, they would say, I want to be their primary financial institution. And then you'd say, what does that mean? And they'd say, well, we want the customer to use us for all their banking services. And then you'd say, well, what are you going to do for the customer? And they didn't have an answer to that, right? So, but today, the objective is not to be the primary financial institution, it's to be the primary financial application. The primary bank that you engage with in terms of your needs. And this is where we have to change our view of that engagement. So we now have to think about the fact that where is the customer, what are they doing, and how do we solve the problem that presents itself? Now, a couple of easy examples to think about that is, say, a car loan or a mortgage, or walking into a store and in-store financing. These are all examples where today we say, stop what you're doing, stop purchasing that car, stop purchasing that home, stop looking at that new iPhone, and come and deal with the bank. And maybe, if you're lucky and you're not too risky, we'll let you continue with that other activity. And this is where the experience has to fundamentally change, because we have to say, if we're going to fit seamlessly in the customer's life, then we don't want them to do that work. That's where the technology really enables us to change the nature of relationship. So if you want a key metric, the first key metric is engagement.
Got it.
How you engage with the customer. The second key metric is your ability to convert off that engagement into revenue and relationship.
Got it. And Kay, moving a little bit back more into the corporate banking side as well, what are some of the benefits that you've seen from this?
Yeah, let me take two specific examples. One, if you really look at from a corporate banking, one of the customers, clients for whom we have implemented a solution, is for the client themselves to design their complete offer. They can look at the product and services from the bank, and they can decide what kind of combination of product and services they want, and what is the commitment they are willing to give it to the bank, right? So look at this scenario. Here, internally, all the bank has to do, I mean, it's a difficult thing to do, to be very frank, is to make sure that what's the kind of cost of making that product available to the client. If you can get that data right, I mean, that's a difficult task. I fully agree with that, but at least to a certain extent. And what's the level of overall profitability, or, which you need to get from the client, then they can co-create the product for you. You don't have to think and do things for you. So this is one of the product, a solution which we are rolling out for one of the clients. This is, I find, specifically on the question, one of the most innovative one which you've seen so far. From that point onwards, if you extend anything, in today's world is about collaboration. Customers don't want to think that you decide on their behalf. If you can enable the clients, this will be an exponential growth. Yeah. So that is one of the, I would say, even though it's not rocket science, it's a very simple thing which you can do, but that will explore the possibility of how you can co-create the product. This is really being rolled out. Another extreme in a retail context, very simple thing, it's again on the loan side, which you referred to, is in an African customer which we are doing it. And in this case, if the client goes to the ATM and trying to withdraw $500, and not 500 equivalent, that is a rupiah, if he only has got 100 rupees, it automatically gives them the option to take 300 rupees loan based on the historical perspective. No questions asked because of the value. So I would say these are some of the few examples which I've come across, and there's a lot more we can talk about. I just wanted to.
And what we see globally, and I think Reinhard, we talked about this earlier today with the Euromoney group as well, and also with Celent. The analysts actually see. And firms like us, as we're bringing in these types of solutions, there's generally about a 5 to 6% top-line revenue recapture that happens within the first year from this type of implementation. It turns out that there's just a lot of money that's actually being left, on the street there. And on the retail side, we typically see about a 2 to 3% revenue return from this type of implementation. So
I can only subscribe to that, because I think in our own experience, by implementing this software, let's say, or the pricing and billing software, we could really close leakages, and it helped us really to pay for the investment quite quickly.
Yeah, and I think you said within a year.
1 year, yeah.
It's great. So in trying to define and implement these types of offers, what are the key challenges that you had to overcome? Neil, we'll start with you.
Where do I start? This really is a kind of technology and data issue. Banks are they keep data very securely. Banks, so they have an engagement with the customer on one product line. They take that data, they put it locked in a safe somewhere nice and safe. And then they have another engagement, they collect that data and put it in a different safe. And then people like us have to kind of go, right, we want a holistic view of that customer, we need all the data set. Okay, right, who in the bank owns that safe? Can we get access to it? And then who in the bank, and then, what format is it in, and how's it connected, and then how can I get it in one place? And then if we're just doing it internally without external data experts, it's a bit easier. If we need to go to external data experts, then we need to master data and all that kind of stuff. So I suppose the basic kind of data management, siloed systems, common schemas, and if you can fix all of that, and then you can get it in one place, then you can start to put some smarts on the thing and make sense of it. But also then, if you want to kind of really knock the ball out of the park, is then how do you bring in external data sets? So thinking about the, especially if we talk a bit about corporate, because I've talked a bit about consumer, is, we really want to understand the kind of commercial and operational aspects of our corporate customers, how they're managing working capital, cash flow, inventory and that kind of stuff. If you can get down to that level and you can encourage your corporates to give that to you, you can be very sophisticated on how you do offers and pricing, and also how you do credit in those scenarios as well.
Absolutely.
And the data silo problem. that exist today, how many times do we ask customers for the same information we've already got somewhere else in the bank?
Yeah.
You know?
I do this on stage. I do a survey. I say, hey, you know, who in this room, for example, has given the same piece of data to a bank more than 10 times?
Yeah, absolutely.
Like your name? Yeah. Okay. Who in this room has given the same piece of data more than once to Amazon? Facebook, Google. They design experiences deliberately designed to be fun and to get more data. And so we're kind of banks, and those guys are at opposite ends, and hence, as Brett said, the Alibabas of the world, wow, full data science. I mean, they lend based on your behaviors, and they don't credit check, they just know.
Well, you know, guys like Prosper and Lending Club, you know, they've got lower default rates than the biggest banks. Zopa, and you know, when you talk to them, they say, well, you know, we for example, if we know when you pay your phone bill, how well you pay your phone bill is a far better predictor of your risk on a Lending Club loan than your credit score. You know, and so it's stuff like that. How do you get that data? You know, that really becomes the key. And then, you know, getting those permissions to engage.
Yeah, and as banks, we have to be a bit responsible as well. We can't act like say Google or Amazon, who have probably a bit more freedom to play with the data you give them. As a bank, we do have to have a responsibility, because that data is a representation of their lives, those ones and zeros, and so that's another challenge as well.
Part of that challenge, Neil, is that generational shift, right? Because the millennials, they don't care about what data you've got and what data they give you. You know, and I mean, you can walk around Cyberburst today and you'll see cyber security and privacy and all these discussions, and millennials are going, meh, whatever.
Still, the millennials might not care, but the regulators care.
Yeah. Well, maybe regulators should start hiring millennials.
But I also think on the corporate banking side, you know, Reinhard, we were talking a bit about how I think there's a built-in challenge that when you start to take on this type of innovation transformation, that having people think about what the possibilities are. And what they can actually do given these types of capabilities. They're so used to, you know, just rearranging the pieces that they've been able to move in the past. This ability to, and so what did you do in Commerzbank to inspire?
We experienced, I think we had a pretty tough time implementing the system because it seemed to many people to be too complicated. So it really helped us after a while when we started simplifying, so everybody could play around with. The second thing was that people, after they found out that there were advantages to it, that they could play with it, they started doing it themselves. And I think thirdly, it was interesting to see after a while, when people got used to it, the idea flows comes in. Say, what could we do it this way? Couldn't we do it that way? And it's basically now it's more an investment problem for me than having ideas on what to do in the system.
NK, in terms of, from a best practice perspective, engaging people and succeeding with these types of innovation transformations, what from the 25 years of experience watching this, what kind of recommendations do you have?
You know, the biggest challenge, we started talking about this is from 2001 onwards, you know, customer centricity. I mean, it is a big push right now. Which is made very common sense because I came from telecom. I mean, they only do this. That's only where all the products were created. So it is very, I mean, common sense to, if you reflect on this, it is just possible. And we saw a financial industry almost 20 years ago, how the telecom industry, maybe I mean, in today's terms, maybe 40 years ago, how telecom industry was. Because every switch had its own pricing rule. And that's how the pricing, I mean, the systems were done. And they moved everything to one single place, and then it's all about experience management. I mean, I just saw that in the .com era. And if you really look at what is happening here, is not about technology per se. I mean, that's a perception. But if you really look at every business is divided into silos. And there are product managers only worried about the product profitability and that dimension. And there are businesses that say, I only want to do only this part of business. So if you were to talk about something like this, it can only be done at the CEO or the next level. So I say there is another dimensions about the challenge of doing something this across the organization is the perception or the strategic level at which you can talk. That's one, obstacle, to be very frank. But the second dimension is, of course, the distribution of how the rules are distributed across the whole the ecosystem. Every time a new product is designed, that is hard-coded in one system. Nobody knows what the rules are. So if abstracting all this into getting into this itself is a phenomenal challenge. I'm just talking about the nuts and bolts problem which you're facing when you go for deployment. So if you really look at the organization structural thing and the technology distribution, it needs some time. For a startup, it is easy. They can just start from that.
Well, it's not easy. It's easier.
Yeah.
Right?
And we've seen this a few times where sometimes the bank will actually just give up on their as-is process analysis. They'll actually just say, it's so confusing and so hard to understand, we're just not even going to try. So fix it without knowing what it is, which can be, I would say that this is, from our experience, this has actually been one of the hardest challenges for us to work through. Because without actually understanding the as-is circumstances actually moving. And this is really why in the first implementation, sometimes this can seem more complicated because we're actually trying to get from a very, very complicated environment to a much simpler environment. And so to get there, you sort of have to first expose how complex it currently is, and then in order to prioritize and get back to a simpler. And Brett, you have it.
Well, at some point we're going to have to almost wipe the slate clean on this and start again because, let's take a simple example. We now have, Apple Pay and Android Pay, and you can pay with your phone, right? So what we do recognize that if you're looking at card fraud, that the single biggest problem today is actually the 16-digit PAN, right? The 16-digit card number. So we're working on tokenization to eliminate that, not just when you do a transaction, but eventually you'll be able to provision your digital card to your phone. You'll be able to, and you'll tap to pay for your phone. So then, let's look at the primary credit product we offer customers, a credit card. So are you going to call it a credit card when you now download an app to your phone that you can also pay with if you're paying with Apple Pay, and that might have contextual credit built into the experience with an offer? Well, it won't be a credit card anymore. So what happens to the head of cards in the bank? Right? What happens to the product silos you've got for cards? They're all obliterated by experience design and changing the way you engage. And I don't think, if we took a survey of the banks in this room, I would be surprised if 1% of the banks in this room have had that discussion at the retail exco level.
Yeah.
Neil's had that discussion.
We have discussions. I mean, our head of credit's head of unsecured as well, so we're kind of, it'll move to an unsecured lending space. But yeah, I think that we pretty much covered all the challenges there with getting these engines up.
And clearly, and Reinhard, you mentioned this as well, and Neil, the regulatory, this is sort of an obvious point for everyone. The regulatory environment has been extremely challenging everywhere. Some regimes actually much more so than others. But I think overall, there's always this overarching context here. I know one of the things that we did at Schwab in order to, we were fundamentally organized around providing ethical financial services. So our standard was actually often higher than the regulatory standard. And so by virtue of having that higher standard, by the time we came to checking, are we in regulatory compliance, generally it was already built in. And so this was one way that we took on of sort of preparing for this. And then the other thing that we did was we also asked the question, okay, if we've got to meet this particular regulatory change, how can we actually use this transformation that we have to do to actually improve the customer experience? What can we do along with this to actually make this better for everyone, including us, given that we have to do it anyway? And so I think it was the addition of those two things. From without getting into why regulations make innovation hard, which is fairly obvious, what other things have you guys seen that you've been able to do around the regulations or despite them in order to still create innovation?
Let's see, I think there are also positive things about regulation. At least I can benchmark my services and my processes against what the regulators require, and I can see really where I'm good and where I'm not so good at. I can build on that, and I can really develop new services which fulfill regulatory requirements, but they also service new needs. I think on the other side, it's very funny because we've been starting to outsource services, etc. And the regulatory pressure on what we have to do in the outsourcing areas has become so large that it's at times doesn't really seem worthwhile to do it. And I think this is part of the package we have to look at it in the future anyhow. How can we insource certain services to build it into our product line? We don't have to build everything ourselves. I think this mindset has to change a lot within banks because we're still in the full building mode. We build everything ourselves. And I think we are not able to do it in the future.
Commerzbank did well with mBank in Poland, where they have digital onboarding, and they were one of the first in EU to really sort of pioneer that.
But just getting it transferred from Poland into Germany, it's quite an interesting experience.
Yeah, we had an interesting perspective in the US with Moving because we have total digital onboarding, and as a result, our cost of acquisition is fractional compared to the primary banks there. Typical checking account acquisition cost in the US is $350. It costs us $5 to acquire a customer, and that's direct. They download the app and 2 minutes to sign up in the app. Now, we were proactively went to the Fed, the FDIC, the CFPB, and basically told them what we're doing and got their support. And then our bank partner, who's based in Kansas, the state regulator said, well, if the Fed said you could do it, then no, we don't want you to do it. So we went through this process of taking them through the design and our identity verification process, and basically proving to them that it would be less risky than the current processes of a signature, because we had more data to use that decision. And then they basically monitored it for the first 12 months, and then they said, yeah, you're good to go, keep going. But I think we're not used to being open with regulators and going to them with an ask to change a process like this and giving them a plan. The knee-jerk reaction within a bank today is, oh, the regulator will never agree to that. Right? And we've become so concerned about what we say to the regulator because of the legal exposure that it provides that we then just say, well, we better not try. I think if we were proactive, I think regulators understand that this is the most innovative time in financial services, and we have to change. They're not innovators, so they're not going to tell you what you can do in the future because they don't feel that's their job and they don't feel they've got the skills for that. So they actually want banks to come and propose to them what to do.
It's helpful.
Yeah.
Helpful going there.
Would you agree, Neil?
Yeah.
Absolutely.
Yeah. I'm having some fun with regulators. We can look across all the kind of and regulators are different as well. This reminds me, we've been doing some work in India, and in India, you're not allowed to give a financial incentive for someone to get a bank account. Everyone has to have the same interest rate, and so the kind of offering system from the RBI structure there is very difficult to work around. There are kind of workarounds in that. So I'll just point that out. Actually, looking at that reminded me of the interesting fun we have, but the RBI is a very, very good regulator in my book. I think the things that make it difficult for us to innovate around the regulation space is a lot of the cross-industry stuff with data. So, for example, and they're trying to solve this in the UK at the moment. I've got a data set, it's obviously private, I can't share it. A telco's got a data set, it's private, they can't share it. Wow, wouldn't it be great if we could do some kind of co-innovation across those data sets? It would really improve, I think, the customers, the offers we could give to customers. And, I'd probably like to see more of that, the kind of regulation around not being able to reach out to certain customer types again. And also cross-country, the Banking Privacy Act, we've got customers who operate in different countries. I can't get a single view of them.
Right.
We're not allowed to do that, which is tricky. But to the regulator's point, it's quite funny when MAS started getting very proactive recently, come in and tell us how you're innovating. And literally the banks were all sat in the room and they're going, how are you innovating? We were like, oh, not much, no, nothing, no. Because, to Brett's point, we're all a bit, I don't want to share too much, but actually that relationship is going very well, and MAS here are very proactive, and have actually said to us, hey, we'd like you to look at this area, we'd like you to look at that area, tell us what you're doing, and we want to kind of, have insight rather than oversight, which I think is good, and we can work through. They've realized that the financial institutions need to innovate and they need to support that. I think their job is to bring the institutions together. And then you've got other government agencies. So for example, our data science lab, which we do a lot of our offer work, we get incentives from the Singapore government to set that thing up. Actually, the data scientists are supplied by the Singapore I2R, the data science laboratory. So that's good as well. So it's not just the regulator, it's the other government agencies which can add a very positive effect on how we think about innovation.
One thing I've seen recently so a lot of times the regulatory focus and fairness, transparency, there's been a tremendous number of fines and all sorts of things going on in the retail space. Corporate banking has seemed to have sort of gotten a pass on fairness and transparency and pricing. But recently, in the UK market, they announced actually an initiative to assess the fairness of pricing in the corporate banking space. And so, and in the US market, there's an entire sub-business of legal firms that have actually sprung up that are helping corporate clients to sue banks, their corporate banks, for not giving them the right pricing. And so while it's not exactly regulatory, it still ends up being a similar type of risk from a reputational standpoint. So I'm beginning to see this shift into a drive for fairness and transparency in the corporate banking side as well. And not just because the individual client, of course, wants it, but also because it's becoming more, and particularly now with social media, the extent to which people can actually instantly share anything that they're seeing, it becomes very difficult to have these sort of backroom deals. So we've got a few more things I wanted to make sure to get through. So with the new disruptors in place, what else are you doing to really try and stay ahead of the competitors? And certainly Brett made the point that they've already come in and taken huge chunks. And in fact, I was just at a party in San Francisco where someone walking past me was talking about getting $150 million in VC money for SME peer-to-peer lending. And the next question I asked him, I said, so who do you have advising you from the financial industry to help you understand how that should work? And he goes, oh no, why would we talk to anyone there? We talk to the clients. We figure out what the clients need and then we design it for them. So this is real, this is happening, this is going throughout the world. And so the criticality, and this is where I'm very respectful, Neil, of DBS for actually creating a Chief Innovation Officer position to recognize how critical this is. Obviously this is your entire program, but what are you doing specifically to try and drive yourself ahead of these both the traditional competitors as well as the disruptors?
Yeah, I suppose it's like, when I turned up, I could have gone one or two ways. One, I could have sat there and invented new product for the bank and kind of brought my team to bear on that. Or actually I went the other way and thought, disruption's happening so quickly, I don't even know where it's coming from anymore, or who's going to do it. Is it going to be Google buying fintechs? Is it going to be Alibaba? Is it, I don't know anymore. So I'm going to focus on getting the bank, evolving the culture. So the bank's more open, they want to do more partnerships, they want to think about ecosystems, designing platforms. We teach them something called human-centered design. So they think more about the customer. We teach them to do experiments. So now we're in meetings, and rather than someone will come up with a slightly more ambitious idea, a bit way out there, normally someone in that room, one of the senior execs will go, hey, no, we can't do that. Now you'll hear, hey, why don't we experiment with that?
That's
and
fantastic.
so that experiment, that get out of jail free card, means that we can be more ambitious and try things that we haven't tried before and try to act more like a tech company or a startup. But we're very lucky with our, Piyush and our executive team. They really get this disruption. It's funny, Brett presented this morning, and the execs come over and said, good points, and they said, yeah, we fully get this already. A lot of the stuff was new as well. But that's the point. There's no point in going out and staying as a big, slow, inside thinking organization. And if your strategy is to go, hey, I'll just license this fintech, my digital journey is done, we will survive. It doesn't work like that, yeah?
It does if you license Moven's technology.
Well, that's a very good point. If you combine that with SunTec's, then you do very well. On this.
A few shameless plugs here. Yeah.
But I think the thing is, my point is, don't just innovate around a small area of your organization. Try and get the whole bank trying something new.
Yep.
Try and don't try and do it yourself. Reach out to ecosystems, to partnerships. Work with fintechs, work with telcos, work with port authorities. Look at trade finance, look at blockchain, and try all this stuff and see where you can get to. Is be more open, lose a bit of ego, realize, hey, we're very smart people, but there's other people out there who can help augment our strategy and what we're trying to do.
Fantastic. So I wanted to, there's a story that I want to invoke from Brett in a minute, but before we get there, Reinhard, if I can hear from you.
I basically fully can subscribe to that. I think the biggest thing is change the culture in the bank.
Yeah.
Make it more open. Another big thing is, how can we attract people working in the banking environment or outside the banking environment to come up with those ideas? Because I think we are all fairly restricted in terms of our personnel policies, etc. Thirdly, I think we start trying to understand the models and how we can use them in our value chain. Just put them in there and what we can do about it.
And I think when you talk about change of culture, it's sort of hard to get your head around. At Schwab, what happened was Chuck actually instituted one question: is it good for the customer? Any idea that anyone came up with, the first question you had to answer was, is it good for the customer? And with that one change, suddenly, the way, instead of starting from how do we make money from this, all these other things, the first thing was, wait, how are we creating this so the customer will actually feel like this is good for them? And there's that type of simple sort of shift in the culture. Brett, I know you had mentioned sort of an example of some coming in the future. I think that there's the type of things which it's hard for us to see, and if we don't start setting up an innovation culture, we're not going to be able to get prepared for such a thing.
So I'll give you an example that I've got in the new book, Augmented, in terms of how radically different banking will be within just 10 years' time. And I shared this with Neil this morning, so it's had the smell test, right? Yeah. So imagine a self-driving car. My son, he's 13 now, he'll be starting work, maybe university then. So in 10 years' time, he might own a share of a self-driving car. He doesn't need to own his own car. And the self-driving electric vehicle will pick him up in the morning, take him into the office, and maybe a couple of other of his colleagues or co-owners of the vehicle. And then it has some time on its hands. So it clocks into Uber and can drive for Uber as a self-driving car, and Uber pays it. It's got a wallet in the self-driving car. It gets paid for acting on the Uber's network, does that for a few hours, and then, well, I need to recharge, so I'm ready for my owners in the afternoon. So it finds a automated parking garage, hooks into one of the Tesla robot snake superchargers that Elon Musk has designed, charges itself up, and then gets back on the road and picks up its owners. Now, it's earned an income while it was driving for Uber and gets paid for that, and it has to pay for access to the parking garage, road fees, access to the supercharging unit, all with this wallet that it's got in the self-driving car. The question of the banks is, how do you KYC for that wallet that's in the self-driving car? with a shared ownership structure? Do you take the car to the branch and get it to sign a signature card? We are entering an era where, as we start to shift away, as we start to build banking experiences into the world around us, we have to detach the concept of a value store and identity being tied together, and that you need to identify yourself before you can start doing payments, for example. Do you take your fridge to the branch if it's going to order groceries for you? These are the challenges we're going to have to face in the near term. And this is in about the same period of time that the iPhone has launched on the world and changed the way we think about apps and interactions on a smartphone. That's how much time we've got to change the way we approach this.
Got it. NK, I know your passion is always about preparing for the future and thinking about where the technology trends are leading us, and certainly what Brett has articulated is one.
That's a brilliant example.
Yeah.
I was thinking here, and there is one candidate though you can give it to, that is the car manufacturer.
Yeah.
So because tomorrow, there's a fantastic statement recently one of the manufacturers said, who is going to be liable for any accident happening in a self-driving car? Who can take the ownership? So ultimately it has to be the manufacturer. If that's the case, that could be one of the possibility, or the Uber, or definitely the point is that it's very simple. We are living in an era where the entire world is changing, the entire business flows are changing, the new way of doing business is going to come in, and the only one thing which we need to be prepared for, that is continuous change. So there is no one model which is not going to, it's not about one use case which I'm talking about. That's not the case. Can we create a framework which is designed for continuous changes? Because how it will evolve depends on the billion or 6 billion people's creativity, right? Which is unimaginably powerful. So it's a question of how we can, as an ecosystem which is moving, all this has to change. There is no questions about it. The whole world is changing, and we are even trying to now talking about connecting minds, right? That technology is already there. So we are only talking about phones in real time, and then at some point it's only, you don't even have to do KYC. You just think about him, he is good. Right? That's the connectivity which is possible, technologically possible today. So it is not any of this. It's all about completely disruptive. It will happen next to 10 to 15 years. That's my take. I'm not dwelling into any specific example. Wonderful example which Brett has already highlighted.
We're about ready to run a little bit out of time. I did want to open up just to see if there are any questions out in the audience. But before I do that, from an innovation standpoint, and in essence, I think there are at least 2 components to enabling innovation. There's probably 15, but for the sake of time, I'll pick up 2 that we've talked about here. One is the technology enablement. How do you actually encapsulate these legacy non-real-time systems without actually replacing them, and actually start to bring these types of capabilities up so you can orchestrate them from a business standpoint? But the other is a mindset. And we talked about the cultural aspect of this, and really thinking from the end customer design perspective, what's actually going to benefit them. The other thing, and this is a part of what you talked about, is the opportunity to shift into a learning mode. That the organization, this is a part, NK, of what you're talking about. How do you create an organization that's continually improving? What you need to do is embed this learning and embed experimentation as a mode of being on a regular basis. Then that's actually rewarded and incented as opposed to resisted, which is the typical bank reaction. So on that note, I'd like to open up to see if there are any other questions out in the audience for us, and. If there aren't any other notes,
yep.
Yes? It'd be great if you could say your name and which organization you're with.
Hi, good afternoon, wonderful session. I'm Rajiv from Accenture. I just want to know, when you look at a customer and whatever we make for customer, it will look like a third-party solution, right? It looks like somebody thinks on customer behalf and acts on customer behalf, but not exactly customer. So how do you actually collaborate with customer in the product innovation side? Do you have some insights on that, or have some examples on that from the bank side?
Well, maybe
Yeah.
you know, we're partnering with banks around the world now to deploy Moven, but you know, and this is quite a different model than you see from a normal tech vendor. We have a direct-to-consumer business in the US with a couple 100,000 customers using it every day. You know, so that's how we test the product in market. We prototype and we test it in front of 200,000 customers, and then we roll it out to our partners around the world, Westpac in New Zealand, TD in Canada, and so forth. And that's one of the ways working with fintechs, you know, gives you that ability to rapidly prototype this stuff in front of the customer.
And from our perspective, we don't leave it too long to bring customers into the innovation process. It's actually day 2. Day 1, you invent a product. We have processes like our business hackathons. Day 1, you kind of build a persona, come up with some kind of concept you get on paper. Day 2, we have customers matching your persona, ready and waiting for you to then spend time with them, understand how they use your paper prototype. You watch them, you get their feedback, and actually it's the surprises you get, we find. It isn't so much the customer goes, yes, I will buy or not buy, or use or not use this product. It's more the, hey, I kind of like this, but actually I don't use your product like this. Let me show you how I use your product. I kind of do a little workaround, and then I use something from over here with your product or service to fulfill that job I'm trying to do. And that is the absolute gold of the whole thing, is getting them right in. As soon as you get an idea, get it in front of a customer before you incur any cost.
Yeah. And one of the things that we did back at Schwab as well was to actually put in place someone who's responsible to be an advocate for that customer type. So there's actually an individual who took on the persona.
Yes.
And so we would have these sessions, we call them beach ball sessions, where you know that person would go through a process, and you'd actually, they'd tell you, it's like, wow, if you did that to me, I'd walk out the door. You know, and so you actually experiment with actually getting into and thinking from the end customer experience perspective through this before you actually put anything into any systems. And you know, it's sort of flipping the entire design process. So I think we're actually at time, and I really want to thank the panel, particularly for participating in this. I think it's been a great conversation, certainly from my perspective. I really appreciated this. And I hope it has been as great for all of you. We'd be very happy. We've got a few idea pieces. Actually, in fact, an additional article written by Brett King in one of our newsletters. And so we'd be happy to share that with you. I think there's some on the chairs up here as well. And any other questions will be over on the side for that. Thank you, and we'll hopefully see you out there.